Look, I'm scared of being wrong in the markets. It is not easy to win in the market. In other words, think about how you're going to have a balanced portfolio. What you know is that asset class as a whole, over a period of time, are going to outperform cash. I think there are two ways that the average investor should think of investing. One is, are you going to create a good strategic asset allocation mix that is a balanced portfolio? That means that you're not going to go to the betting table and bet against active investors like me. It is more difficult to win in the markets than to compete in the Olympics.
Hang on a second. You guys have an extraordinary track record of winning.
Yeah.
Is it harder to compete in the markets today than it has been since you founded Bridgewater?
No, I don't think so.
Really?
Not the way we do it. And the reason I'm saying not the way we do it is we don't take systematic biases. I think for a lot of people, they're systematically long everything, And so we have a world in which when the world gets bad, it's bad for them. In 2008, it was great for us. I don't know, we had nearly a 10% return in 2008. So we have the opportunity to go either way. We just may be wrong if we're wrong. So I'm so scared about being wrong that it has helped reduce my chances of being wrong because I'm so scared. I won't take bets that that I don't feel good about, and we diversify our portfolio, and that's how we got the track record. I think in the average investor, most everybody, don't compete against pros like ourselves or other people. Don't making tactical asset allocation bets or moving around in the markets because you're probably going to lose. Okay, that's the most thing that you could be most comfortable with. If they don't, you have a depression. The only times that hasn't happened. But to know how to achieve a balanced portfolio, and that's a whole other subject I don't know that you want to go through. If you're talking about tactical bets, in other words, I can come on the show and I can say, I think this is good. But then what happens is if I come a month later and I then change my mind because something has happened, then I'm going to mislead people. So the tactical bets I don't think are going to be helpful. I would say that we're in an environment in which it's very important to have a well-diversified, and that'll include assets like, to some extent, maybe a little bit of gold in your portfolio. In other words, what could I tell investors? Try to achieve balance in various ways. That's a whole subject about how to do it. And also, gold, at 5% of your portfolio, 5 or 10% of your portfolio, under the circumstances, would be also a prudent thing to do. Prudence is the important thing to do. The reason I'm also referring to that is we have a situation where a debt is money. In other words, we have a fiat monetary system too. And so we're having problems as these central banks operate. And so think of it as another form of cash. And when cash now has 0 or 0% interest rates or less, think of it as one of those possibilities in terms of how do you create diversification? One of the problems is that the experience that you had as the last experience is the one that's going to stick in your mind and probably will not be the one that's going to get you. So that the next experience will be very, very different. I know my parents went through the Great Depression, and then they missed out on the boom because then they were always thinking about that. And so I think that what they need to do is see all of those crises. That's why you can see inflationary ones and see all of those, and once you get that perspective, I would say 3 things to your generation, okay? 3 recommendations. The first recommendation is to think about your savings and how much money do you have for savings. And the best way to think about that is to think, how much money do I spend each month? And how much money do I have saved so that how many months am I going to be okay without that? And to value savings, right? And calculate it, because savings in that is freedom and security, and think about what that is. So that's the first. How much do I have for that? The second thing is, how do I save well? What should I put my saving in? And when thinking about what you should put your saving in, realize that the least risk investment that you think from volatility is the least risk investment, which is cash, is the worst investment over a period of time. And you can judge that by judging the rate of inflation in relationship to the after-tax income you're going to earn. So if you have an inflation rate that's 2 or 3% and you're earning 1%, and you have to pay taxes on that 1% or 2% that you're going to get. You're going to get taxed essentially at 2% a year, and that's going to be a problem. So you have to move into assets that are other assets that are going to do better over a period of time. And when you do that, the most important thing I can convey to you is to diversify well.